It's May, and the NHL Playoffs are in full swing. Why does this matter to a business podcast? Well, there were 5 Canadian cities represented in the first round, and it just so happens that our resident expert on consumer spending data is also a sports expert. His name is, of course, Sean McCormick, and he'll join me to talk about the playoffs. He's going to tell me what he noticed in local spending trends in that first week, who were the winners and who were the losers. Stick around, it's a really fun chat. But first, our featured interview is with Douglas Porter. He's an economist at the Bank of Montreal. Douglas is going to talk about Canada's economic performance in the first quarter of this year and his predictions for the future. What are the key indicators we should be tracking? What can Canadians do to help the economy through this uncertain time? Is the Buy Canadian movement working? What do tariffs mean for inflation? What's the ideal exchange rate for the Canadian dollar? Douglas answers all of these questions and many more in our chat. You don't want to miss this. And why is this all important? Because it's just good business. I'm joined by Douglas Porter. He's the chief economist with the Bank of Montreal. Douglas, thank you so much for joining me today.
Well, thanks for having me, Al.
So let's talk about, well, first of all, what do you do as the chief economist at BMO?
So just as a little bit of a background, I've actually been working on Bay Street for over 40 years now. I've been chief economist at the Bank of Montreal for a little bit more than a decade. I manage a team of roughly 15 economists, one of whom's in San Francisco. The rest are here in Toronto. We basically serve as the economic focal point for the bank as a whole. You know, quite a bit of what we do is go and give presentations, provide information and forecast to our clients, both within the bank and also our external clients as well. And we do serve as, I would say a bit of a resource for the bank as a whole, whether it's information, data, or projections. I'd say the last thing that's really key in our role is we do provide forecasts for the bank itself, both in terms of what we create for our regulators, but our own planning as well. So it's quite a diverse job we have here in economics.
All right, well, I'm going to get you to put your prognosticator hat on in a second. But first, we just finished Q1 of 2025. Can you share, some quick insights, like how's the Canadian economy performing?
Well, it's interesting. If we were not talking about tariffs and a trade war with the U.S., I think we'd be having a very pleasant conversation about how the Canadian economy got through this difficult episode of relatively high inflation and high interest rates. And we were coming out the other side of that. It looked as if with declining interest rates, the Canadian consumer is in much better shape. The housing market was starting to turn around. I think there were a lot of positives to talk about the Canadian economy, and we'll see decent growth, I think, for the first quarter. But that's all colored by the trade war we're now facing and all the uncertainty on the trade front. So in many respects, looking in the rearview mirror, which isn't bad, it doesn't help you too much with what's facing us in quarters ahead.
Sure. Now, given our audience is, small business owners and entrepreneurs, and you kind of already mentioned, interest rates, but what are some other kind of key economic data points that our listeners should be following right now?
Well, I think obviously the thing we all have to follow is exactly what's next on the trade front. But I think in terms of how it's really affecting the economy, look, I still think one of the most important economic indicators out there is the unemployment rate. It's not perfect, but it's a pretty good gauge overall of how the economy is doing. Is it weakening? Is it strengthening? Is it close to operating at full capacity? That comes out, basically the first or second Friday of every month for the prior month. To me, it's still one of the two go-to indicators. The other is in the inflation rate, both the headline and some of the so-called core measures of inflation. Despite all the fancy economic indicators that are out there, at the end of the day, those two are really what tells the Bank of Canada what's going on. If you don't have all day to study the economy like I do, really those two indicators are still the most important, the inflation rate and the unemployment rate.
Now, correct me if I'm wrong. I feel like leading up to the pandemic, we basically had all-time low unemployment rate, right? How is it now? Like, what do you see now?
Yeah, you're right. Both before the pandemic and right after we came out of it. Of course, we had a huge spike in unemployment during the pandemic.
Right.
But on either side of it, we were talking about the lowest unemployment rate we had seen in 50 years. At one point, it got below 5%.
Right.
Well, now we're more in the high 6% range. And by the way, this is one of the reasons why the government has somewhat put the brakes on immigration because, the job market had softened a lot. Historically speaking, an unemployment rate in the high sixes isn't that high, but in recent years, it is a bit on the weak side. I think that with the trade war, that unemployment rate is probably going to go a bit higher. We think it rises to about 7.5% range or so before it begins to back down next year, which is a bit on the soft side. It's not nearly as tight a job market as it was a couple of years ago when it was almost impossible to find workers. Now the shoe's kind of on the other foot. It's now quite a bit tougher to find a job.
I mean, you brought up the elephant in the room. It's sitting right there in the corner. I was just in Regina last month visiting small business owners and interviewing them for another podcast that I do. And that's all they want to talk about, right, is tariffs and what this means and the inflation that we just came out of and looks like we're in for again. What do tariffs mean for Canadian businesses and consumers? Are we looking at more inflation?
So I want to push back on that because this is sort of a common narrative that we're seeing in the media.
Okay.
All they're focusing on is the inflationary impact. And the reality is I think that's a secondary story. I'm actually not that concerned about inflation flaring up here. I'm much more concerned about the effect it's going to have on our growth rate, on our industries, on our ability to sell to the US. I think it's more of a depressant on growth rather than a stimulant for inflation. Yes, we are putting reciprocal tariffs or retaliatory tariffs on some things we're importing from the US. Some of what the US is putting tariffs on is going to blow back onto Canada. But I'm not that concerned about inflation. Look, we've had a big drop in gasoline prices. We've actually seen a number of commodity prices coming down because there's concerns about the outlook for the global economy. As I said, we've got a much looser labor market than we had a couple of years ago. I'm more worried about the weakness in growth than the uptick in inflation. And as I said, I want to push back on this media narrative, that's really just focused on the inflationary impacts. I don't think that's as big a deal for Canada. I'm much more worried about weak growth.
That's interesting. So kind of weak GDP moving forward.
Yes.
We've seen the Buy Canadian movement picked up a lot of steam over the last couple of months. You mentioned maybe slower GDP, but how do you think that'll affect the economic outlook if we're bringing more industry back to Canada, or at least spending more money within the country? Will that help?
It can help for sure. There's certain sectors where, we can see it's making a little bit of a difference. It's interesting. Whenever I talk to people about this, they always talk about what they're buying in the grocery stores.
Right.
They're not really looking beyond to other things. And there's lots of different items. We don't just have to focus on food. By the way, I would encourage people to still eat as nutritionally as possible. Don't forsake good nutrition. In other words, forgo fresh fruits in the middle of the winter. But the bottom line is we do think it can have a positive economic effect. Look, it's very tough to measure, but our best estimate is it can add about 0.3% to GDP over a year, which is not nothing. It's helpful. And I think it is real for certainly some folks are really trying, and it can make some difference. I think we're going to talk about it in a minute, but one area where it can really have an effect is tourism. Just by staying at home in Canada, that can make a really big difference. And the one thing we are seeing is the restaurant business seems to be benefiting. It's a very domestic industry. People who are not traveling to the US and staying here do seem to be spending a little bit more at restaurants. And usually restaurants are one of the things that gets hit when people are concerned about the economy and, are reining in their spending. They tend to back off. It's a discretionary item.
Yeah.
But we're seeing sort of the opposite. Their restaurants are actually doing relatively well.
Interesting. We had Max Roy on from Restaurants Canada, and he's obviously concerned about the price of food items and also labor, right? And the labor shortage. So I'm wondering how that'll balance out, considering you project unemployment might be going up. Maybe that'll help a little bit in the restaurant industry as well to get some more people in there. Just beyond Buy Canadian, it seems like Canadians are just specifically boycotting U.S. products, and travel is a big one there. I mean, we've seen pictures of empty airplanes going down, especially around March break. But in terms of like hard data, what are you seeing? Are you seeing like a big shift there as well in travel?
We definitely are on the land crossings. It's a little less obvious on the flights. I actually spoke to the CFO of one of our large airlines recently, and he said it was a bit exaggerated in the media about the amount of the decline in the bookings to the U.S., but it was clear that it's happening. And these airlines, of course, can shift planes around. They can go to different destinations relatively quickly as need be. I guess the one thing I would say about flights, of course, you have to book a long time in advance, and maybe that's why it's not shifting quite as quickly. But for sure, we're seeing it in day crossings. People really have pulled back on that. Now, some of that, of course, is the Canadian dollar got very weak earlier this year, and it simply didn't make sense. It was quite costly to travel to the U.S., so that's probably played a little bit of a role as well on that front. But I personally think this is one area where the Buy Canada movement might have the biggest impact. Is in where we see the tourism dollars going this year. Canadians staying at home, Canadians traveling in Canada, going on staycations even,
right?
And foregoing that trip to Florida or Arizona. Look, you've even got governors in some of these southern states who are really letting the White House know and letting Canadians know that they'd really like to get Canadians back. I think it is the one area where we can see a real economic impact of where Canadians can really make a difference with their dollars.
So we're looking at a pretty interesting summer, I think, in this country for tourism.
It certainly seems that way. All the anecdotal evidence is bookings are pretty solid. And given the fact that a lot of economists like myself are warning about a possible recession, again, travel is one area that's quite discretionary. It's good to see that that sector is looking at a relatively solid year.
I mean, I feel like we saw a similar spike coming out of the pandemic when travel to the U.S. was still kind of iffy. I remember we took our first family trip in 2 years. We went to Newfoundland and we'd never been, and it was a great vacation. I highly recommend traveling to Canada for vacation. It's eye-opening how beautiful the country is.
Yeah, absolutely. And I'm a big advocate, too, of going to Newfoundland if you've never been there before. Or, I know people who haven't been to Banff or Whistler.
Yeah.
Two fantastic spots.
You mentioned that the Canadian dollar is pretty low right now. And I've heard, arguments on both sides, whether it's better to be low for more trade or better to be higher. What would you say is better for the economy right now?
You know what? It's a mixed bag. There are winners and losers from a weak Canadian dollar. You don't want to be too weak, right? Because there's only so much you can sell to the U.S. And as we've seen, you can get the administration complaining about selling too much. It can also put upward pressure on our own prices on things that we import. On the other hand, you don't want to be too strong, because while it does hold down import prices, it makes things more affordable. It also makes it very difficult to export to the rest of the world. Ideally, what I would consider to be fair value for the currency would be something around the mid-70s. We're a little bit below that right now. We've actually seen the currency come back in the last month or so. It's about 72 cents as we speak. I'd say that's pretty close to being about right, given the circumstances that we're facing. I wouldn't want to see the currency strengthen a whole lot more from here, because it would make it very difficult to compete in a period when, let's face it, we're really struggling with the outlook on trade with the U.S. But on the other hand, I wouldn't want to be too weak either, because that actually can lead to inflation. So I would say something in the mid to low 70s is not a bad place to be for the exchange rate.
I think another kind of positive change that's coming of this tariff war might be the changing of the inter-provincial trade barriers. Again, I was just in Saskatchewan. That came up a couple of times. How quickly is that moving, and how big an influence could that make to Canadian business?
So first of all, I don't want to set up false expectations that this can replace the U.S. as a trading partner. And the reality is physical goods do mostly travel across the country without that much issue. There are some specific areas where, for instance, of course, the famous one is wine and spirits, right? Where we have seen some problems exporting across the country. But I think, look, this is one positive that might come out of this, is we might actually see some real improvement. And, we've had Ontario actually, first of all, it was Nova Scotia. Now it's Ontario has really been one of the most aggressive in trying to drop these barriers. I would really like to see almost every province get on board here. Oftentimes Quebec is the one in particular that tends to really protect its market and drags its feet a bit. But I am encouraged by the tone I've seen and heard in the last few months. I think there are some grounds for optimism here. In terms of how much it can ultimately add to the economy if we were to drop all those barriers, I've seen estates anywhere from as low as 1% of GDP to as much as 7% of GDP.
Wow. Yeah, that would be significant.
That would be huge. I lean more towards the lower end of that range, but that's still quite significant. Like if we could add 1% to 2% of our economy, that would be huge. That would go a long way to offsetting some of the damage from the trade war with the U.S. And, the momentum has been pretty good there. We've seen a little bit of a slowdown there, but as I said, we got a nice push from Ontario, which I think is really helpful.
Yeah, I just want to be able to import more Regina-style pizza over here. Right now we can't.
Or BC wines.
Or BC wines, yeah. So again, our audience, small business owners, entrepreneurs, what advice would you give them right now, given all the uncertainty going on at the moment? You kind of already mentioned lean into the buy Canadian. What else would you advise them to do?
Well, first of all, we're going to have a new government here in Canada. We have to see exactly what their financial plan will be. But what I would say is, well, first of all, stay flexible. Obviously the trade policy with the U.S. can change on a dime, as we've seen. But I would say stay optimistic. There's been a lot of terrible negative headlines, especially around trade. Eventually things will settle out there. We'll have a better idea of what we're dealing with. And I do think that ultimately Ottawa will develop a pretty solid, coherent plan in terms of how to move forward amid this uncertainty. And, our fiscal position in Canada is still pretty good. Inflation is basically almost back to normal. Interest rates are almost back to normal. So a lot of the traditional measures, are in relatively good shape. We've just been dealing with this wild uncertainty in U.S. trade, and ultimately we will gravitate towards, it could be a new world,
Yeah.
But we will gravitate towards more certainty on that front. We'll know what we're dealing with and how to move forward from here.
I mean, we should come out of this stronger, right? Diversification is only good, right?
It is. And also, I would just add, no matter what the president has said, we've actually had relatively well-balanced trade between Canada and the U.S. It's been to the benefit of both countries. And the only reason why we have a trade surplus with the U.S. is because of all the oil that we sell to the U.S. Outside of that, we actually run a deficit with the U.S. And so, I think ultimately governors, other politicians, business leaders will get through to the president, and we will get to a new relationship with the U.S. on the trading front, which I suspect won't look that different from what we were dealing with before.
Well, I love that you're turning this discussion back to the positive. So I will ask you this one last question. What are you most excited about regarding the Canadian economy?
And I have to say, it's been tough to be excited in a positive way so far this year. But I guess I am excited somewhat about this drive, as you mentioned, to diversify both internationally and even within Canada. You want to be careful about economic nationalism, but it is encouraging that people are really trying to support local businesses. They're looking to, as we've talked about, travel in Canada. And I think the new government will look at ways to better support the domestic industry as well. And it's going to be different, not necessarily worse, though.
Yeah, I believe we'll come out of this a lot stronger. Now, if folks wanted to get more of your insights on the Canadian economy, is there a place they can follow you or read up on what you have to say?
So the best thing I could say is just Google BMO Economics. Basically, most of our material is there and you don't need a password. Our forecasts are weekly and a lot of the other material we write is open all on our website.
Okay, well, thank you so much, Douglas, today for your time.
Nice talking to you, Al. Thank you.
I'm back on the road, and this season, I'm headed to the heart of the prairies known as Queen City, Regina, Saskatchewan. In every corner of Canada, small businesses are facing challenges, adapting, and thriving. And in Regina, the entrepreneurial spirit is alive and kicking. Join me for an all-new season of Yes, We Are Open, where we celebrate resilience, innovation, and the stories behind the businesses that keep Canada moving. Oh, and Regina-style pizza. We'll get to that later. The NHL playoffs are on right now, and as of this recording, last night we had 5 Canadian cities participating in the playoffs. So what does it mean for the cities that are hosting these playoffs? We have some consumer spending data for at least the first week of the playoffs, and here to talk about it is our resident expert on both data and sports, a VP of Business Development at Moneris Data Services, Sean McCormick. Thank you, Sean, for joining me today.
My pleasure. I always like digging into the memory bank to talk sports, brother.
So let's talk about sports and let's see what the numbers show, at least for that first week of playoffs. Who were the big winners for these playoffs?
Well, I mean, as we've seen in past years, the big winners are bars and restaurants, in and around the arena. And as we get deeper into the playoffs, that tends to spread citywide. We had the Battle of Ontario for the first time in 20 years, the week of April 20th. So that was a home game for the Leafs and an away game for the Senators. And what we saw in Toronto near the arena, we saw a 5% lift in restaurant spend in game 1, a 6% lift in restaurant spend in game 2. And then the Senators, who are the visiting team, well, they had their fans, going crazy a few hundred kilometers away. And what we saw with them was a citywide increase in Ottawa in game 1 of 12%. Double-digit increase it's remarkable in spending, just in terms of what does that mean to the merchant and the impact. So we saw a 12% increase in restaurant spend citywide in game 1. In game 2 in Ottawa, again, a road game, the Senators are playing in Toronto, a 14% increase citywide. So the Battle of Ontario, definitely alive and well, not just in the home team's vicinity, but also Senators fans going crazy cheering on their team when they were on the road.
I mentioned before, in Toronto is a city with many options for entertainment. I mean, we have the Raptors, the Blue Jays, the Leafs. Metallica was just in town for a concert.
Yes, they were, Al.
Big concert. So it would explain a little bit about how maybe it's not a huge increase. Also, Leaf fans like me, we're kind of taking a wait until next round approach, whereas Ottawa's in the playoffs for the first time since 2016, 2017. So it's a pretty big deal there.
Yeah, a massive deal. And what we've seen over the last few years is the teams like Edmonton that have been in the playoffs each and every year, there's a bit of a ramp up. Fans definitely get jacked for the first round and the second round. but it can take some time as the fans are, they're excited the first couple of games, but they really start hitting it hard in round 3 and round 4. To the Oilers specifically, restaurants had a pretty good night in Edmonton. Both of the first 2 games, the Oilers are playing the Kings on the road in LA. In game 1, remember the Oilers have the Moss Pit, they call it, right? That's their version of the Ice District. And in and around the arena, which includes the Moss Pit, so you've got a couple thousand people down there partying outside, watching the game on the Jumbotron. Game 1, near the arena, restaurant increase 25%. And in game 2, near the arena, restaurant increase 22%.
That's crazy.
So enormous bumps there from all of those Oilers fans coming downtown to gather outside the arena.
And those are for away games.
Those are for away games. Yeah. And even citywide, Edmonton still had some decent positive lift, 3% in game 1 and 5% in game 2. Again, both road games.
Mm-hmm. And one other stop that saw a pretty good lift there would have been Winnipeg and the Jets.
Yeah, so the Jets, and now remember, that's a team that they won the President's Trophy this year. That's a very good hockey team. High expectations of that team, not just NHL-wide, but as well in the city of Winnipeg. So their first 2 games at home against St. Louis, near the arena in game 1, an 11% lift in restaurant spend. And game 2, also at home, was a 4% lift in restaurant spend. Of note, game 2 in particular saw a significant increase citywide of 13%. So 13% lift in restaurant spend for the day of game 2.
That's interesting. So as I said, as of this recording tonight, we're going to see there's a few series that could potentially end tonight. For example, your beloved Oilers are up 3-2 against the Kings. What's your prediction for tonight? So I have it on record.
Oh, they're an exciting team, Al. They've run the Kings out of the rink the last 2 games. We've been waiting for that lineup to gel. They are gelling. How good is Evander Kane, man? He's in mid-season form, and he's 5 games into his season. Calvin Pickers, he looks like Kelly Rudy between the pipes. No offense to Kelly Rudy. He was a good goalie, but he sure was not conventional. But Calvin Pickard stopping the puck for the Oil, and the team's up to their old tricks, right? McDavid and Draisaitl, 20 points in the first 4 games, and they had a couple of more in the 5th game. And then they're getting depth scoring throughout the lineup. So I think the Oilers will shut it down.
I hope so. Yeah. I hope they do. I hope the Leafs can finally, get that monkey off their back too and end it tonight. But we'll see anyway. Thank you so much, Sean, for your time today.
All right, brother.
That's all we have time for this month. Once again, please check the show notes for links to everything we talked about in this episode. If you have any questions about anything business related, you can email me at podcast@moneris.com, and we'll try to answer them in future episodes. On behalf of Douglas, Sean, myself, and the rest of Moneris, it's just good business saying thank you for listening. See you in June.